Apple won, Fed nothing. That's the score. It's all you need to know about today's trading, as Apple briefly regained its title as the largest company on Earth, rallying nearly 3% and helping propel the S&P and NASDAQ to new records. The Dow dipping 35 points, S&P jumped 0.85%, NASDAQ pole vaulted 1.53%. This despite the fact that the Federal Reserve kept rates unchanged at high levels and said they're going to stay high until we get evidence that inflation is more subdued. How did Apple stock and so many other big cap stocks rally in spite of the Fed? Because events have overrun pretty much everything all at once. First, this morning, we got a consumer price index number that was very cool. Much different than we thought. It was a clarion call that inflation seems to have peaked. The actual core increase, 0.2%, was slightly better than the 0.3% we were expecting. If we get some more readings like this, the Fed will have what it takes to cut rates. So many prices fell: airfares, motor vehicle insurance, new vehicles, communications, recreation, gasoline, eggs, uncooked poultry, including turkey, fish, ham, cheese, veggies, potatoes, avocados, carbonated drinks, milk. The CPI number simply didn't jive with the narrative that the Fed clearly bought in when it started its meeting yesterday. Before the CPI, members of the Open Market Committee seemed inclined to give us no rate cuts this year. But after the CPI, that seemed wrong, and the Fed's now on board with one rate cut by the end of the year, although that could change depending upon the data. Of course, this is just one inflation number that came out in the middle of the Fed meeting. So you can't have a hard line Tuesday and soft line Wednesday. That's difficult. Now, I thought Jay Powell walked the tightrope incredibly well today, basically saying if there are more good numbers like today, then the Fed indeed can cut. If there aren't, it doesn't have to. The economy is gradually cooling. He said it's gradually slowing. It's no longer superheated. That's perfect. Fed policy says no transcripts of meetings will be released for 5 years. We get the minutes a lot sooner, but they're much less illuminating. So we'll have no idea who could have changed their mind in response to this number. No matter, this very meaningful CPI reading seems to have caught them totally by surprise. In that sense, the positive event completely overran the negative expectations, causing interest rates to plummet instantly.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.